Bitcoin again, I love what's going on Bitcoin because it's just a whipsaw action. And what I mean by that is we just keep on seeing price come down into this area here, right? So down into this area, and it hits, and then it shoots up to this area here, all right? And then it comes back down to this area. This is a wedge pattern. Somewhere out here, these two lines will meet, right? So again, at some point they meet, but the question is, which way do we break out, right? And that's the bigger question. We've talked about that. Now, I did say yesterday that I thought alts were going to be topping and pulling back. The thought process there was very simple. We had Bitcoin dominance hitting technical support. All right, let's flip over. Here's your technical support on Bitcoin dominance. If we zoom in, we can very clearly see, again, here's your Bitcoin support level, right? Bear with me as I get the drawing tool back up. But basically, we have these factors right along here, and this is where we were yesterday. Well, look at us. We're starting to inch up just a little bit on Bitcoin dominance, which tells me the altcoins are starting to fumble the ball and beginning to bring it back in. Dollar is trading a little bit lower. Take a look at the trend line that it's hammering on. If we break down like I think, it continues to be bullish for the dollar, right? So again, what we look here, bullish for the markets, not necessarily the dollar. But again, weakness on the dollar, bear flag starting to form. If this continues down, we should see the markets continue to stay buoyant. Now, the markets are overbought. There's no denying that in the short term. But remember, markets can remain overbought for serious amounts of time before they correct. But again, look at the dollar. Here we had that move down. Here's the support. It's continuing to chop. We're starting to see some red on the dollar today. That signals some downside in the overall dollar and upside in the markets. 10-year yield. Let's flip over to that chart here. Let's zoom in. The 10-year yield is kind of whipping around today. You can see it was down, it was up. It's basically flat on the day.
Hey, crypto legends. Welcome back to Crypto Street, which keeps your crypto game strong. Today, we're diving into the whirlwind of Bitcoin's recent escapades, the bombshell at OpenAI, and the SEC's mysterious dance with crypto exchanges. It's like a crypto roller coaster, and we've got the front row seats. Let's jump in. Bitcoin and Ethereum, the dynamic duo, had a showdown in daily transaction fees, and Bitcoin took home the prize. Imagine Bitcoin flexing its transaction fee muscles, reaching a hopping $11,630,638 on November 16th. Ethereum, well, it slipped from its high, landing at $8,445,997. It's like a crypto heavyweight match, and Bitcoin just delivered a knockout punch. Focus, folks. OpenAI, the genius minds behind ChatGPT, dropped a bombshell. They kicked out CEO Sam Altman. This charismatic face of AI found himself out of the captain's chair due to a lack of transparency. The plot twist is real, and now Mira Murati steps in as the interim CEO. The AI revolution just hit a plot twist. It's a secret. Rumor has it the SEC had a hush-hush meetup with crypto exchanges. What's the scoop? They might be pushing for spot Bitcoin ETFs to do cash creates, not crypto. The SEC wants to shake things up, making broker-dealers deal in cash, not Bitcoin. It's like a covert mission in the crypto world. Time for a quick lesson, crypto legends. What in the world is an ETF? It's like a basket of goodies that tracks the price of an asset or a bunch of assets. Bitcoin ETFs, yep, they're a thing. Futures ETFs got the SEC nod in 2021, but the spot ETF drama continues. Will they or won't they? The SEC's got its eyes on the crypto industry, but the spot ETF saga is still unfolding. Phew. Want to ride Crypto Street investors? From Bitcoin's fee face-off to OpenAI's CEO saga and the SEC's undercover talks, it's been a crypto roller coaster. Now let's continue our enlightening discussion with Gareth Soloway.
Looking at the S&P 500, let's flip over to the 10-minute chart. The S&P 500 here was trading very nicely to the upside and has started to come in just a bit. But be aware, take a look at this. This is where the S&P closed yesterday, and this is where it currently is. So you're still looking at overall an S&P that is looking to open higher on the day. All right, so again, we're looking at the S&P possibly continuing its relative strength even in an overbought scenario. Now, let's go to the daily chart of the S&P 500 here, because what we've seen is a meteoric run to the upside. Take a look at that move here. Now, again, there is room for it to go a little bit higher before it hits what I would refer to as a key downsloping trend line. Let's take a look at where that trend line comes from. Zoom all the way out. You have to go all the way back to the all-time highs right up here. So if we go to the all-time high here, we connected through the highest point in recent history. That gives us this level right over here. Now, if I look at my chart, that level is around 455 on the SPY. So that, to me, looks like the normal, obvious target price that the S&P or the spiders should go to. Now, having said that, I do want to make you guys aware, anytime you have a ton of gaps, be very careful. So in other words, it would not shock me to see some retrace action, or maybe we touch 455 and then see a big pullback, because one of the things that you can see here, look at all the gaps that have formed here, all right, here. All of these are huge gaps in here in the chart. And one of the things that as a technical trader I've learned is that gaps are made to be filled. All right. In other words, the market wants to draw it back. This is abnormal. This is almost like there's a step missing in the chart. And it wants to come back and fill that hole in, if you will, on a technical basis before it can continue potentially higher. So it just does leave that opening when you get so many gaps along the way that at some point, maybe we go here first, but at some point it's got to check back to fill this gap. Some point it's got to check back to fill this. Some point check back to fill these on the chart. Again, to fill those holes back in, put a step in that spot. Okay, so again, we know our max upside on the spiders is about $5 higher. That could be where we're headed over the next couple days. We'll watch and see what the S&P does today. But overall, it's still a warning sign here for a back test of some of these levels. Now, I do have some big charts to show you guys today, but before we do that, I do want to go over the QQQ. The Qs are into some resistance here. Now, I want to show you this. So basically, this is what we would refer to as a double top. Double top, simply, it is exactly what it sounds like. It's a high, then we pulled back, and now we're revisiting a high. Essentially, it's a double topping point right from here to here. All right, now we did pull back a couple days off of that level. Let's see, is this the beginning of the back test of some of these gaps? Because we have a gap here, we have a gap here, we have a gap here. We have gaps all the way back down. I think in the very least, the NASDAQ needs to come back and fill this area in right in here. Now, part of my reasoning for this is that the market on the technology side, what we've seen in the NASDAQ, in the Magnificent Seven, and maybe, again, you want to take out Tesla. Tesla hasn't performed that well. But if you look at Meta, if you look at Apple, Microsoft, NVIDIA, even Google and Amazon, they have been tremendous, adding $1.5 to $2 trillion in value in just the last 3 weeks. Okay, so again, they are overbought. If they start to just stall out a little bit, it's going to breed a pullback in the NASDAQ 100. Case in point, take a look at Solana. Yesterday, Solana made a new short-term high at 60, something like 66, 68 bucks. It's all the way back to 57 right now. Take a look at ones like Avalanche. Avalanche has a topping tail. Granted, it's early in the day, but look at this move up on Avalanche, but look at the reversal. Avalanche was close to $25. It's now back to $21.40. The alts are beginning to collapse lower. Look at Matic. Matic, which is Polygon. Polygon already starting to roll over after going here, right? So you're starting to see these alts come down. So it looks like the Bitcoin dominance chart was a guide to where we would see the tops on the altcoins. And again, beautiful little roll over there. I could keep going and going on these altcoins again, guys, but ultimately you guys get the gist on that. Again, I don't want to spend too much more time as we're coming to the end here. Back to the chart of gold. Gold continues to be strong today. It's only up a little bit on the day. So we're up a little bit, but I still continue to like the pattern here. Again, this is now the key support line right through here, from this area right across to here. That's your technical support. This is your short-term resistance just above $2,000. And what we want to see now is this level get broken through. So right above this level, if it takes that out, we should get back to the all-time highs. I actually think that's possible by year-end. There's not a lot of time left in the year, but I think we could test the all-time highs on gold by year-end. All right, oil. Oil's getting a little bit of a bounce. Yesterday, it got absolutely annihilated, right? So If we look at oil, it got very close to a technical trend line down here. Remember, the ultimate head and shoulders target is still around $68, so we still have to recognize that. But again, just be aware that that $68 level is still in play because the head and shoulders is still in play as well. And I think ultimately what we're seeing here is a market that remains in this glory phase of the Fed potentially being done. My big fear now is that we're going to see the economic data get slowly worse and worse and worse and worse and worse. And that's going to be problematic.
Bitcoin saw its average transaction fees peak at $18.69 per transfer, marking a high of 0.00051 BTC. This surge represented the second largest increase in 2023. However, in the following day saw a reduction in on-chain fees. Despite this, as of 8:13 a.m. Eastern Time, there was a considerable backlog of approximately 239,862 unconfirmed transactions. Bitcoin, BTC, witnessed a notable shift in its value, exhibiting a price swing from $35,579 to $37,904 within a 24-hour span. Currently, the turbulent market activity has stabilized, with Bitcoin trading at $36,387 per unit. Ethereum, ETH, the second largest cryptocurrency by market capitalization, experienced a downturn on Friday, dropping 4.7% against the US dollar. Over the previous week, it has seen a decline of 6.6% in its value. The trading dynamics on November 17, 2023 showcased a complex blend of factors influencing Ethereum's market behavior. U.S. Treasury Secretary Janet Yellen has acknowledged the advantages that the adoption of digital assets might bring to several key economic activities. After the Asia-Pacific Economic Cooperation (APEC) finance ministers meeting, Yellen stated that while digital assets do pose risks, they have the potential to increase financial inclusion. The decentralized exchange DEX, Jupiter, has unveiled specifics regarding the distribution of the first 10% tranche of its community airdrop, encompassing 1 billion Jupiter (JUP) tokens from a total pool of 10 billion. This initiative is designed to honor 955,000 distinct Solana wallets that engage with Jupiter, acknowledging their role as early adopters. The blockchain technology enterprise Aave Companies, recently rebranded as Avera, is still navigating challenges in stabilizing its stablecoin GHO, which is currently struggling to sustain its desired $1 peg. The project's liquidity committee is actively working on strategies to strengthen the stablecoin, aiming to elevate its value above $0.985 by November 30, 2023. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.